So, you know how they say buy land, they're not making it anymore? Well, I tried that once, bought a piece of land, only to find out it was underwater half the year. Talk about a real liquid investment, am I right? Now this little tale of mine just highlights the importance of doing your homework before diving into property investment. You see, many folks out there jump headfirst into the property market without doing enough research or properly evaluating the property's value. They're like kids in a candy store, eyes wide, grabbing the first shiny thing they see. And just like that kid, they're likely to end up with a bellyache, or in this case, a real estate investment that's more sinkhole than goldmine. Then there's the classic mistake of confusing price with value. Just because something's cheap doesn't mean it's worth the investment. You wouldn't buy a chocolate teapot, would you? So remember folks, investing in property isn't just about buying land, it's about buying the right land. Unless you're into scuba diving, then by all means invest in a personal lake. Now let's dive deeper into this property investment business. And no, I don't mean literally dive like my previous underwater property fiasco. In the world of property investment, the first rule of thumb is location, location, location. You wouldn't buy a pair of Jimmy Choos and wear them to a mud wrestling match, would you? So why buy a property in a location that's going down the drain? Always research the area, consider its growth prospects and its appeal to potential tenants or buyers. Next, let's talk about market trends. Just like you wouldn't wear flared jeans in the era of skinny jeans, you shouldn't invest in property without understanding the market trends. Look at property values and rental rates. Are they going up steady or spiraling down faster than a lead balloon? Understand the dynamics before you put your hard-earned money on the line. Now, onto the potential for return on investment. This isn't a charity, folks. You're not giving your money away, you're investing it to make more money. So calculate your potential returns, consider the costs, and see if the numbers add up. If they don't, it might be time to look for another property. Let's not forget the different types of property investments. You've got residential, commercial, and industrial properties. It's like choosing between a steak, a lobster, and a vegan burger. They're all good, but they cater to different tastes and require different strategies. Residential properties are great for steady income, while commercial and industrial properties often yield higher returns, but may require more management. So there you have it. The 4 key factors of property investment. Remember, this isn't like shopping for shoes. You can't return it if it doesn't fit. You're stuck with it, for better or for worse. Choosing the right property is like choosing the right spouse. You gotta live with it, maintain it, and hope it doesn't drain all your money. Choose wisely, my friends. Alright, let's wrap this up with some golden rules of property investment. And no, buy low, sell high is not one of them. That's too obvious, even for us. Rule number 1, diversify your portfolio. You wouldn't put all your eggs in one basket, would you? The same goes for property investments. Mix up your investments with residential, commercial, and even international properties. It's all about spreading the risk. Rule number 2, keep a close eye on the market. In real estate, knowledge is power. Be in the know about market trends, property values, and interest rates. It's like reading the tea leaves, but less mystical. And finally, rule number 3, be patient. Rome wasn't built in a day, and neither is a property empire. It's all about the long game. Investments take time to mature like a fine wine or a block of cheddar. Remember, the real estate market isn't a get-rich-quick scheme. It's a get-rich-slowly with lots of hard work and patience scheme. But hey, at least it's not as wet as my underwater property. Well, that's all the time we have for today. I hope you learned something from my property investing blunders. Let's quickly run over the key points we discussed. First, the importance of doing your homework can't be overstressed. Research, and research some more. Understand the market, the location, and the potential return on investment. Second, consider various factors before investing. Don't rush in. Take into account your financial situation, risk tolerance, and long-term goals. Lastly, do not forget the golden rules of property investment that I shared. These are your guiding principles in this exciting, though sometimes treacherous, world of property investment. Remember, in the world of property investment, knowledge is power, and with power comes great property. Until next time, this is SmartSpenderSage signing off. Remember to like, share, and subscribe for more financial wisdom. And always keep your investments dry.